Hello and welcome back to another video. Today we're going to be talking about that it is here and what exactly does it mean? Well, you can see here that we're looking at a yearly chart and we're looking at the yearly low for the S&P 500. So what happened? Well, we got a bearish engulfing candle. Why? We got a higher high and we got a lower low. Bearish engulfing candle is pretty bearish. So it is here. And I don't really want to make this video, but we cannot ignore what is happening on the tape. Post-Jerome, what I was talking about yesterday seems like it is unwinding. So we also have a little bit of a warning because when we look at QQQ, it already actually lost this area. Dead cat bounced back above, and now what is at a lower low. It's now down 31.79% so far this year. So what I want to look at in a moment is going to be what exactly happened to QQQ when it got to this area, what it did after, and what it's likely going to do into the next couple of days, but maybe the next couple of weeks, because as a reminder, tomorrow is OPEX, so $3.2 trillion expiring. No one really calling in their puts tells me that they wanted to expire at a certain level. It's also notable that the closing price for today is going to be affecting where we're likely going to be tomorrow for the pre-market settlement, and that's where basically 2/3 of the money is going to be expiring. So 2 trillion, largely SPX, E-mini futures, and non-SPX indexes are going to be expiring tomorrow morning. And then in the afternoon at 4 o'clock, we're also going to have another 1.2 trillion expiring. SPY, SPX, non-SPY, and then single stocks. So this is really important because as we're looking right now at the market, I'm trying to ask myself whether or not the fear that we're currently baking in is justified or not. We nearly halved versus yesterday. Yesterday we were at 20. A week ago we were at 30, and today we're at 12. We're almost back to single digits. This is pretty bleak. So I also want to thank people for pointing out that I made a mistake yesterday. Yes, I'm human. I make mistakes. And if you continue to watch these videos, please note, I have mild dyslexia, which means that, yes, I sometimes mix things up. I'm not embarrassed that I have dyslexia, but if you're watching videos, and you can note, I'm recording this right now literally minutes after the market is closed. So our goal is to make sure that we're uploading things as soon as possible, so you're able to watch them as soon as possible. So what that means is that sometimes we say things that are wrong. I am not perfect. I definitely make mistakes, and I appreciate that people are pointing out that I made a mistake. Specifically, what I made, the error I made yesterday is that I was talking about this area right here, where I think it was actually right here where I was talking about the Fed, and the last time we had the Fed talk was actually here. So I apologize, I was wrong. But when we look at the price action for what happened today, oh my goodness, I was talking about whichever way this bar breaks was going to be a decisive move. Well, we gapped down and actually broke for a lower low and a lower high. So what happened? Well, it barely rallied today. The high here is 370.94, and our previous low here is 370.59. So all it was able to really do is basically get to the low of 2022 and reject, and then sucked up a little bit into the close to try to get a little bit of a push off. So let's now look back at the 12-month chart and just try to understand exactly what's happening. So I'm now going to delete all the stuff so you understand what we're looking at. And I just want to point out here what actually happened. So we're going to point out the exact area. We're going to throw a magnet on here, and we're going to try to make sense of what's actually happening here. So we have the low of the year. We also have the open of the year. And then we also have the close of 2020 and the high of 2020. Now we're going to look at shorter time frames to see whether or not we're actually dancing around these areas, because that is very typical. Whether or not you're aware of those levels, the robots are. Why? Well, because they're looking at profit and loss. They're looking at whether or not they're making money. So as we zoom in here, is it not obvious that that's where the liquidity is? Absolutely. So gap, flush, hit the line, bounce back up, roughly close, gap down the next day, flush, come back up and, gap up, push up, basically rejected 378.50, push all the way down, suck back up and close at 373s. Then we gap up, push above the area, come right back down, and almost close on the area. Now it's done, but we're bouncing off this last area. So my question is whether or not we're actually going to be able to bounce back up to here and dance here a little bit, or if we're now going to break down to a new lower low and start actually going lower. Because this rejection right here tells me that we weren't even able to muster a gap fill. And that is terrible because as we zoom out here, how many gaps do we have now? Well, we got one right here. We got a second one right here, and we got a third one right here. It's pretty nasty out there. And this is not really looking all that great. One more thing I want to point out here is just the hourly chart on SPY, and I don't actually have my screen up, so I'm just going to show you what I had posted in Slack this morning. And again, this is part of what you get if you're part of our group. So here, I was just looking at, again, we have our hourly chart we've been looking at for a while, so we're still going down. Big flush of volume after we got the breakout, so big, bigger, bigger, biggest. Oh my God, right? Pretty big this morning too. Sorry, until the close yesterday. It's also notable that as we zoom in really, really close here, we note that we didn't actually manage to close a bar back above the downtrend, which means that technically that's just price discovery higher, and then ultimately it puked up today. So because of where we were on the hourly chart and what transpired on the daily, it's hard to say that the bulls have very much juice right now. They can't even avoid payout. So it's very, very ominous to me. So now that we understand that the yearly levels really matter, now let's try to think about what happened to QQQ, because we can actually get a little bit of a preview in terms of what could happen to SPY. So now let's go to QQQ. We'll look at the same 12-month chart. And now we're going to zoom in here, use our magnet, and use a horizontal ray. And we're going to snap lines at last year's low, last year's close. We're going to go to 2020 close. I think that's pretty much the same area. We hit a high of 314.69, and the close is 313.74. Close enough. So now let's zoom into the daily chart. And I don't know where this, oh, that's from the daily chart there. We're just going to delete that one. So, isn't this kind of interesting here? Yep. So initially hit that area. What do? Well, we get a lower low. There's our push higher, ends up being a trap. Where do we go down? Whoop, right back down to the next line. Dance a little bit above, below, above, below, above. Get our final rejection, and that's over. So this is where SPY is right now. SPY literally just poked below, and again, it made a new yearly low, closed back above. So is there potential we could actually rally into tomorrow? Is that going to be a trap? Could there be more to the story here? I don't know. But I can note that if we do lose the low, we cannot ignore it. So let me actually just zoom out here for a second to make sure oh, okay. So the first time we actually visited the lower line is what we want to look for. So the first time we visited the lower line, that's right here. So this is the first time we actually tested that 2022 low. So this right here is going to be our 2021 low on QQQ. And I apologize for my writing, right? Yeah, I'm terrible at writing, and I'm left-handed, so using my right hand to draw, I'm not so great. Anyways, looking here, so now we can note that the circle right here is basically the first time that we tested SPY. We also note that it came down pretty violently, right? Crash landed, 10% cut right onto the area. Then we staged a higher low, fully puked it up, gap down, pump up. So this right here is actually the sign of the short-term reversal. It ended up puking, but this is where we start actually going sideways. So maybe we're going to have to see a gap down and a pump up for us to actually capitulate on SPY. And then again, what do? Well, we did not get back above the 2020 high or the 2021 open. And then we got a hard rejection here. That's all we can muster is one more test. And then sour and then lower, lower, lower. So now if we think about that and we have a look at SPY, we're going to ask ourselves whether or not we see a lot of that same evidence here. So now let's have a look here. Oh, I guess I deleted everything. All right, let's redo it. That's all right. Not a big deal. All right. One more time, let's look at QQQ. So here we are, probably about right here. I would say that this is probably where we are right now, right here. So, right, big up, all the way down, gap down, pump up. All right. So here we are. We're testing the area for the first time. And honestly, I don't know, right? We got multiple gaps. So now that we got 3 gaps on the chart, I said it yesterday, I thought that if we were able to close inside the gap, that we would start to get there. All we were able to do is price discovery. So maybe we need another false trap here. And just because of expiry, it would kind of make sense that if the true move is going to be lower, what they would want to do is actually have it go down and then up, down into tomorrow, and then up into the early part of next week. So what? They can actually smooth out where the ultimate direction is going to go, which is going to be down. So post OPEX, and because this one's huge at 3.2 trillion, we might get an opposite move because they're going to know that the puts are going to go in the money, And it's very notable because we also noted yesterday that we had record shorting positions from Goldman Sachs starting here and pretty much finishing here. So until we're able to get above minimum 373.8, which is going to be our 2021 area, it's not really looking good. And then we got to get above 384 or exit bear market territory. For what? Closing the first gap and getting to the second. So what this basically tells me is that I think that maybe we might get a gap down tomorrow. It looks pretty likely. If we don't get one tomorrow, maybe on Monday, maybe on Tuesday. But that's what I would really be looking for us to find a short-term bottom. We also have to ask ourselves, should we trust it? Answer is no. Why? It puked it right back up. So if you just look at the days here. So Monday, Tuesday, Wednesday, Thursday, Friday. Interesting. So we're actually not quite there for the tracking, but I think that all the premium expiring is actually a lot more notable. All right, a few more things for us to look at. Then we're going to look at a couple of charts here. Oh my God, all right, who wants to look at this today? Unless you're bearish, you're like, man, just shut it down. Who wants to look at this? It's red everywhere, right? Where do we start? SPY and QQQ. So what's really notable here is actually that SPY is decoupling from QQQ in terms of actually going down more. So 366 and 271. We got about 5 points lower on SPY than on QQQ. Also note that DXY is actually down by 1%. So because DXY is down by 1%, the decline on QQQ and SPY is even more impressive. Because being down by 1% on DXY, we should actually be down by 4.3 on SPY and 5% on QQQ. A 5% cut on an index, oh my God. VIX is up 11% to 33. Over 30 means elevated risk. And the 10-year and 2-year note are actually ticking down a little bit. Everything's red. DAX is down nearly 4%. BTC down 7. ETH down 10. Trillion dollar companies down 3 to 8% apiece. Put call ratio is not really looking all that notable here. And then every ETF is red. So we can note that it's quite red now. And we were talking about the bear market club. So who do we got here in bear market club? Oh God, right? All the biggest companies. So let's actually go no group to see the biggest blocks. Well, we got Apple confirmed, Microsoft confirmed, Google confirmed, Amazon confirmed, Tesla confirmed. Even Berkshire's down by 10. Meta confirmed, right? Visa confirmed. Even credit cards are bearish. Oh, sorry, Visa's only down 11. I misread that, right? There's my dyslexia. Nvidia negative 47, right? JP Morgan, Walmart's almost there. Procter & Gamble's almost there. So this will be the first week where we actually have the entire trillion-dollar company closing in bear market territory. Apple was the holdout, but it doesn't look like it can really hold up here on its own. That's pretty much it. So we understand the themes now. Let's look at a few more things. Why? We got Jerome Powell talking tomorrow. So he's going to be talking at 8:45 a.m. tomorrow, and oh boy, is this going to be spicy. So he's going to be talking tomorrow morning. What's he going to be saying? Let's talk about that in a moment. So Fed Chair Powell, again, I got to thank Elizabeth for this. Again, speech at 8:45 a.m. It's going to be welcoming remarks in regards to an inaugural conference at the international roles of the U.S. dollar. And a really interesting theme here for me is going to be, what does Jerome actually say about exporting inflation across the world? Because the world runs on the dollar. And if the world runs on the dollar, as the dollar starts getting more expensive, it means that doing business gets more expensive for every other country in the world. I also think that Jerome might provide commentary on what's been happening with the fiscal or monetary or economy, and I'll be watching closely for anything leading into that. Again, this is going to happen 45 minutes before the market opens tomorrow. Also note that we were looking at this area already. So we were looking at 364 as our 2020 high. Let me actually just double check that I had the right number here. Yep, it was 3648, I believe. So again, where are we? Well, we're getting deeper into bear market targets. And it's not really that much further off for us to get to 340s or 330s. If we continue our current descent, we're going to be there pretty fast. And one more thing here I'm just thinking about as I go through here was we were looking at something else. Let me see if I actually have it saved. If I don't, then here we go, I have it saved. So let me have a look at this one, because I think it's a little bit important for us to understand that if we're very zoomed in, it could be hard for us to understand exactly where we're coming from, because when we were about 100 days into this correction, we were almost perfectly tracking what happened in 2007 and 2008. And this is what I was calling for in terms of the falling wedge, trap, and then continuation lower. So it kind of looks like we are right on track for 2007, 2008. That does not make me happy to say it. It does not give me joy, but that's the reality we're in right now. We also have Fed monetary policy report coming out tomorrow. It's currently tentative, so I don't know if that's actually confirmed yet. I'll be paying attention though. Something else again, let me just close that one out. Then we talked about that one. We can close that one out. And then Patrick. So Patrick actually brought up a really good point today from our group and talking about how it kind of looks a lot like the seasonality chart here, where we go into the summer doldrums, right? Sell in May and go away, and then come back on Labor Day. So that's what it looks like here. And it looks like maybe the worst is done. And the analysis we did before, looking at SPY and QQQ on the yearly chart, kind of says a lot about this right here, where, again, we're into the middle of June, so what? Maybe one more big old nasty cut, then we start to go sideways. And this aligns here with the FOMC schedule as well, where we have a meeting in July and then a meeting in September. So if they're going to take a pivot, I think it's going to be quite notable. One more thing here that Mason actually shared is the Goldman Sachs projection for rate hikes. And again, they were correct, and they were one of the first ones to call out the 75 basis points. So here they're giving us a projection. We continue to expect a 75 basis point hike in July, a 50 basis point hike in September, and 25 in November and December, which means front loading it and ultimately getting to a year-end target of 3.25 to 3.5%. This is important because as we look at the 3.25 and 3.5%, what does that align with? The 2-year note and the 10-year note. So right, they're actually down today. 10-year note is down here to 3.2. 2-year note is down here to 3.1. There's no inversion as of right now either. So it's pretty notable that they think we're going to do one more supersized and then 50, 25, 25. If this is what happens, would it make sense we do this? Kind of, yeah. So one more shock in July, right? Start going a little bit lower, fade into September. And then in September, oh my God, only 50, boomtowns. Right? Another trap. There we go. So I'm going to go through a deeper review on the weekend deep dive tomorrow. And I think I'm going to go through a couple of really fast charts here. I'm going to look at weekly charts actually. And I'm going to go to my board where I have everything already done because I can actually look at my notes. And now we're going to try to make sense of what's actually happening here. Falling wedge broke bearish. So how are we going to save this chart? Well, I have no effing idea. Oh, God. It's pretty depressing looking at this, and I know that there's a lot of real pain out there. So like I said before, if you don't have anyone to talk to, go to our community tab, and I am offering you free help. We're also going to do a public stream tomorrow for the final hour where you can come and hang out with us if you want. QQQ, it is right here at the end of the funnel. It's right on the, wow, it's actually almost on the 200 weekly moving average. So, right, what's another 9 points? Let's just get it out of the way. Dollar is down, so that's notable, right? Still inside the pocket, made a fresh 52-week high. But it is coming down with the 2-year note and the 10-year note. So again, Jerome said 75 is likely not going to be the new normal. Goldman Sachs says, I don't know. Let's look a little bit further down to see what's green here. So oil, of course, oil's greens has a bullish pattern or a cup and handle with lots of lower wicks. So that means dip buyers. If we look here at CL, which is the futures for energy, we can note that there's lower wicks all over here, so it makes sense that it's getting bought up and it's holding a bullish pattern. Gold. Gold is also holding its 50 weekly, and if we zoom out here to the monthly chart, we start to see that same pattern here where we talked about this, I think actually on GLDG on the video we did. So here we're talking about how there appears to be a super cycle here where we look at the log scale, we see the big cup from the 1970s, which is the period we're in right now, 1980s inflation, to where we are right now, another cup and handle, looking like it wants to reclaim its all-time highs as well. Looking at the weekly chart for BTC, oh God, this is not looking pretty. We've saved 20K so far. I got a feeling if it cracks, it's going to get nasty. We're hanging at the low of the week here. This does not look really good. Same thing with ETH. It's held on to 1,000 by about 1% at 1012. I don't know. Really important area here. We're already back below our 2018 high, which means we're less bullish than we were before any of this global crisis. Apple broke the falling wedge bearish, rejecting off of it. Yuck. Microsoft still holding a funnel lower. Google, right at the end here, right on support. Loses that, probably going to take a leg down to the 50 weekly moving average at about 1767. Amazon, another red week. What's the, right? Fully puked up its split here. If it loses 100, probably looking for more downside. Tesla, Elon is all over the news. I don't want to talk about it. I encourage you to Google it if you're interested. There's lots of headlines out there. We just note that we have a bear pivot here. So what was support is now resistance at about $700. Please also note that, again, there's that $560 billion in single stocks expiring tomorrow, which is notably going to be for these trillion-dollar companies. So there's going to be a lot of money on the line tomorrow. NVIDIA, all right, gap fill, shooting star, sorry, inverted hammer. That does not look good to me. Finishing it off here, we note that DIA is now entering the demand pocket, and it's actually pretty close to the 2020 high, and also it's 200 weekly moving average, or the black line, which corresponds with the black number, 293.28. XLK, bear break, fresh lows. IWM, rejected at the low here, and that's all it could muster. It got to the downtrend, rejected off the lows, fresh lows, and doesn't look pretty. It's now below the 2018 and 2020 highs are now resistance. ARK, again, if we're taking the theme of IWM and ARK for the bounces, ARK was only able to make it to its first relative low. I was looking for roughly 52. All it could muster was a tested 46. Pretty bearish. NYA, woof, all the way up to the 200 weekly here. So yikes, right? Yikes. 9 out of 10 weeks are red, just like everything else. RSP. Yeah, once it lost the pocket, it's diving here. Looking for a little bit of support here at about 131, but it looks more likely like it wants to go to the 200 weekly at about what? 122.86. XLF, right around that 200 weekly. That looks like the theme right now, right around the 2020 highs as well. We heard Revlon's going to be going bankrupt. They're filing for bankruptcy, so that's leaving an overhang on banks, in my opinion, because they've obviously lent money, right? Banks have lent money to big companies. If we're going into a recession, there's going to be more bankruptcies. And with no interest over the last couple of years, with no interest and any defaults or bankruptcies, the bank is now eating the loss. That's bad. Again, lost its low, right? Lost the green line, diving lower. About 10 more points to get to that 200 weekly here, though. Have to see what happens. XLE. Whoa! Wow! It's actually down this week. What's going on? What's going on, Energy? Is the world shutting down? I actually didn't even notice it was down this red. Whoa! So what's really interesting is XLE versus CL. That's really notable. Utilities, and it's gone. Pattern's gone. Pattern's broken. It's looking like it wants to race to that 200 weekly here at about 62. EEM, bear. It's super bear. So we're looking for the potential for a really lopsided inverse head and shoulders to hold. Not sure it will. And then finally, FXI. It is still in a funnel lower where all it can do is just go down. That's all it's doing right now. With that said, if you're interested in watching more, there will be a video that queues up here in a moment. But otherwise, we're going to have a live stream tomorrow where we're going to talk about the stock market crash of 2022. And you can ask us anything. Finally, if you want to know how to get prepared for a potential recession, there is a link in the description and the top comment, which gives you a newsletter and can teach you about how to get prepared if we're going to be going into a recession. Otherwise, I thank you for watching, and I look forward to seeing you tomorrow. Thank you.